The gold price has moved up because the central banks don't trust the United States, and after not trusting the United States, they don't trust each other, so that the mediums of exchange outside the US dollar aren't really renminbi or yen or rubles or dinars or anything like that. Increasingly, you will see them short term in gold or in dollars. My belief, however, is that the ongoing deterioration of the purchasing power of a bunch of fiat currencies, but the most important of which is the US dollar, the reserve currency, will cause more and more human beings, as opposed to governments, to also view gold as a store of value.
On the last U.S. trading day of the week, month, and quarter, gold is poised to close at a very bullish weekly, monthly, and quarterly high today, as well as a record high close in futures markets. RickRule, an influential figure in the investment community, currently serves as the president and CEO of Sprott U.S. Holdings Incorporated. RickRule remains bullish on gold, attributing its price rise more to central bank purchases and U.S. dollar depreciation than to conventional market factors. Central banks want to diversify their holdings but need more opportunities. Suppose a central bank wants to decrease the share of dollar-denominated bonds. In that case, buying Chinese debt is the only viable option outside traditional currencies like the euro or yen. Obviously, such a decision comes with its own risks, so gold becomes the only option to decrease the share of foreign government debt in reserves. According to RickRule's projections, as fiat currencies, especially the US dollar, depreciate, there will be a surge in demand for gold. He foresees this demand driving a fourfold increase in the US market's interest in precious metals, bringing it more in line with the global average allocation to such assets. With the global economic shift and downturn, the US dollar's valuation has taken a significant hit. The US dollar now accounts for 58% of foreign exchange reserves held by overseas central banks, a record low. Gold, the most ancient and widely accepted international currency, has chipped away at some of the dollar's dominance, accounting for 15% of reserves, up from 11% 6 years ago. Given the current economic backdrop, the outlook for gold remains bullish in the short term. The combination of dovish Federal Reserve signals, weakening economic indicators, and strong central bank buying presents a favorable environment for gold prices. The situation with NYCB further injects uncertainty into the market, potentially diverting more investment towards safe haven assets like gold. Now, we present the clips of RickRule's insights from his recent interview with WT Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
My belief is that the increase in the gold price that we've seen so far, as an example, has more to do with central bank buying and the weaponization of the US dollar than anything else. I think retail buying falls on as a consequence of people feeling the real bite of inflation, and as a consequence of that, developing a fear for the ability that they might have with fiat savings instruments to keep up with the deterioration in purchasing price of their savings, which has traditionally been the condition precedent for an increase in the gold price and ultimately the increased prices of gold equities. I think in a rear-looking way, the answer to that's no. The buyers have been the central banks, and the central banks' motivations have been primarily the weaponization of the US dollar, the attempted export of US policy and political norms to other countries outside the US dollar. The US dollar, the United States government, has tried to use the US dollar to increase its influence in a bunch of countries that don't particularly want to be influenced by the United States. The consequence of that is that the countries have, of necessity, begun to substitute US treasuries and US dollars as both stores of wealth and mediums of exchange. We have seen consistent outflows from retail physical ETFs, which suggests that in Western nations, at least, the citizenry have not been active buyers of gold. In fact, they've been active sellers of gold. The gold price has moved up because the central banks don't trust the United States, and after not trusting the United States, they don't trust each other, so that the mediums of exchange outside the US dollar aren't really renminbi or yen or rubles or dinars or anything like that. Increasingly, you will see them short term in gold or in dollars. My belief, however, is that the ongoing deterioration of the purchasing power of a bunch of fiat currencies, but the most important of which is the US dollar, the reserve currency, will cause more and more human beings, as opposed to governments, to also view gold as a store of value. Anthony, it's worth noting that in the largest savings and investment market in the world, the United States, which accounts for, at last count, 23% of savings and investments worldwide, that the market share of precious metals related investments relative to other forms of savings and investment assets is less than 0.5%, which is to say that 0.5% of all savings and investment assets in the United States are involved in precious metals or precious metals related assets. The mean market share of precious metals over the last 4 decades, according to JP Morgan Chase, was 2%. So if we merely had reversion to mean, which is what I think we're going to have, you would see demand for precious metals and precious metals related assets in the United States, the foremost savings and investment market in the world, quadruple. And I think that's precisely what's going to occur.
RickRule suggests that the steady ascent of gold since 2000 and the weakening of the US dollar indicate a forthcoming acceleration in gold price appreciation. The 2000s brought about a general upward trend for gold, especially as investors sought safety during the 2008 and 2009 financial crisis. For RickRule, gold ownership isn't about small gains. It's insurance against major disruptions. He sees the potential for a significant price surge, possibly hitting up to $8,000, underlining the importance of this investment strategy. In his analysis, Rick observes that governments with strained relations with the U.S., such as Turkey, Iran, India, Brazil, Russia, and China, increasingly seek to store their wealth and diversify away from the U.S. dollar. In recent years, the BRICS nations, Brazil, Russia, India, China, and South Africa, have been at the forefront of efforts to reduce their reliance on the U.S. dollar in international transactions. Now, the alliance is taking a significant step towards economic autonomy with the creation of an independent payment system based on blockchain technology. Let's get back to the interview.
When is the gold price going to go up? I began adding to my personal bullion holdings in 1998. So I view the ascent of the gold price really as having started in 2000, which is to say in 2000, the price of gold was about $250 an ounce. Now it's about $2,100 an ounce. So I would suggest that gold has done what, 8.6, 8.7% compounded a year for 24 years? When is gold going to go up? Well, the year 2000. People have expectations that were set in the decade of the 1970s when the gold price went from $35 an ounce to $850 an ounce. Rational expectations would suggest that the answer to that question is in hindsight. My personal belief is that the rate of increase in the gold price is going to accelerate because of the deterioration in the purchasing power of the US dollar, particularly relevant to the interest paid on fiat-denominated savings products. Is that I don't own gold because I think it might go from $2,100 to $2,500. I buy gold because I'm afraid it's going to go to $7,000 or $8,000. The set of circumstances that would give you a quantum increase in the price of gold are almost invariably unpleasant. I would prefer that it didn't happen. I'm a 71-year-old guy, very happy with his current lifestyle. I'd like to see no disruption. But I see a whole bunch of reasons why gold could go to 7,000 or 8,000. I'm not saying it will. What I believe is that it is a contingency that is certainly worth insuring against if you can do it, and I can do it. Published reports look for governments that don't have particularly good relationships with the United States. So look at the Turks, look at the Iranians, look at the Indians, look at the Brazilians, look at the Russians, look at the Chinese. People who were concerned, first of all, about the weaponization of the SWIFT banking system by the United States government, and then, of course, by the confiscation of the U.S. government of $300 billion worth of U.S. Treasury securities held by Russia. It's pretty clear that the United States has visions of being a global hegemon. And if you aren't in the United States, particularly if you're in a foreign government, if you are in a foreign government where your issues are perhaps not in line with the feelings of the United States government, you feel threatened, rightly, by the actions of the U.S. government. You feel the need to store your wealth and have a medium of exchange outside the U.S. dollar. That's precisely what we see occurring.
For decades, There has been much speculation about a potential plunge in the dollar's value. 2024 is almost certainly not going to be the year when the dollar's reserve currency status ends outright. Nonetheless, investors may increasingly turn to gold as a hedge against potential currency devaluation. Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.